I'm just going to record. Okay, so just going to share my screen. And you should now be able to see my chart for gold.
Yeah.
Everybody see that? Yeah.
Yes.
Okay. Right. So I'll do the normal thing when I first start. I get rid of all the drawings and I show how I get the setup back on the screen. So I'll remove everything from there and start from scratch. And I think I can do that all in one, can't I? Remove drawings, right, okay. And if I get rid of the matrix and get rid of the indicator and get rid of that. So we now strip back to bare bones. We've got, we're on the 30-minute chart. I'll change it to 15 and try and get it all on the screen. Right, okay, so we're now looking at, this is today's session on the right-hand side of the blue dashed line, and this is yesterday's session back to this blue dashed line. So if you're working on a free version of TradingView, if you look at this left-hand channel and they've got 1, 2, 3, 4, 5, 6, 7 down. If you hover over the arrow, it'll say prediction and measurement tools. If you click on that, it'll give you a drop-down menu. I'm just trying to get rid of a pop-up that keeps appearing on my screen. There we go. So, so you click on that and you get a drop-down menu, and at the very bottom you'll find fixed range volume profile. As I say, this is available on the free version of TradingView. So if you click on there and you go to the first candle of yesterday's session, so that was that green one there. Doesn't matter where your cursor is, so long as you're lining up with that first candle, and then you need to line up with the last candle of the session, and that's there, and you'll find that you've then got the volume profile for yesterday. And just to explain for any newcomers, this blue shaded area is the total activity for yesterday. This is where all of the trades were placed yesterday, but both buys and sells. But the blue lines represent the top 70%, which is how the strategy gets its name, V70 for volume 70. And the grey lines is the other 30%. We're interested in the 70%. And the red line here is actually the point of control. That's the place, that's the price where most trades were placed yesterday. So at that point, that was the height of the volume yesterday. Just to point something out before I go any further, although this was the extreme, the highest extreme of all the trades placed yesterday, we've also got some other significant areas. So if I move my cursor down to this area, you see that there was a lot of activity around about those price levels. There was also another extreme at that point there, and others, also some more up here where there was a lot of activity. So we're not just, we are interested in this as a point of control, but we need to bear in mind that there were other significant areas of activity during yesterday's trading. So what we do is we put the 3 lines on and take a horizontal ray and put it where the blue meets the grey. I'll make that a black line, and I'll do a similar there. And just as a matter of getting accuracy, I zoom in on that area and just make sure that my lines are actually in the correct place. So I just make a small adjustment there. That one seems to be exactly in the right place. So I'll zoom out again. So that's the two lines. This is what we call our, when we come to looking at today's chart, this is our field of play between those two black lines. And the red line represents the point of control, which will become today's target. So we'll put we'll superimpose a horizontal ray on there. And again, just to make sure we're completely accurate, we'll just see. There we go. So that's the black line that I've just put on. I'll change it to red in a second, but that's now accurately placed. Can change it to red and zoom out again. And there we've got all we need to start analyzing trades. So we've got the field of play, which is between those two black lines, and we've now got yesterday's point of control, which becomes today's target. Now, one thing I do to make this really visual is I put in here a rectangle, and I just put it at the top and the bottom, and then I extend it right throughout the day. So that's so there we are. We've got today's field of play between the two black lines. If I just move that. And that's really just to make sure that I focus on the right area when I'm analyzing these trades. So this is what we call the value area high. This is the value area low, and this is today's target. Now, the first question to ask yourself is price within the field of play? And obviously, yes, it is at the moment. So what we're looking for, if we're following the three-line strategy strictly, is we're looking to take trades from where it is now up to the point of control. And when we get to a point of control, we'll get out of the trade and we would wait and see if it comes down and possibly take another trade back up. Or if it goes through, we would wait until it gets to the top and take a trade back down. That's the basic three-line strategy. However, through a lot of back testing, a lot of trial and error, I've actually come to the conclusion that it is also safe to take trades from the point of control back up to the value area high, and equally from point of control back down to the value area low. And I'll come back to that in a second, because that's actually based on, as I say, back testing experience, but it's also based on Anastasia's theory, where she recommends that we take trades away from the point of control. Once price has moved away slightly from the point of control, then we're pretty safe to get into a trade. But I'll come back to that. What I'm going to do is I'm going to get rid of this. This is the session, so this is a fixed range volume profile, which I put on today on yesterday's trading. So we'll get rid of that, and then I'll show you what you can put on if you've got a paid for version of TradingView. So if you've got a paid for version, you can access this, which is VPSV, which is volume profile session volume, and you'll see why I use this in a second. We've now got volume profile for yesterday, which, as you would expect, is exactly the same as the one I drew on a few minutes ago. but I've also now got volume profile for today. And if I look at a slightly bigger picture, you see in a second, there we go. I've also got volume profiles for many days in the past. So it allows us to look at what's happened over a period of time and to get a bigger picture. So whilst we're on that one, let's have a look at and see what's happening with gold in the longer term. Now, this is today, and we're going back to what we can see on the screen. We've got right back to sort of 18th of February, so that's over a month. And you see that in this period here, price was actually trending upwards. It reached a peak at that point there, which was it was 2 weeks ago. And then since then, it's been on a downtrend. There was a bit of a hiccup there, started to come back down, but it's been in the last couple of days, it's been consolidating quite a bit. Just to point out, whilst I'm on that 1 hour time frame, these blue lines are outstanding points of control. So this is a previous point of control. This one is from the 14th of March, and that is still outstanding. There's a similar one below, and this one comes from the 25th of February. Now, the reason those are important is that price is attracted to these. These behave like magnets. And price will, at some point, go up to that line there and take out that point of control. As it has done, you'll see there are several. There's one there, a couple there, and a couple more there, but all the previous ones have been taken out. And we need to bear that in mind, because if price decides to go up, there's a potential target. If price decides to come down, there's another potential target, and there are others waiting below as well. So I'll move back to the 15-minute chart. Try and get a clearer picture of what's happening today. Reset the chart. So we've got basically a naked chart there, apart from the volume profile. For anybody, say, I don't think there's anybody on at the moment that hasn't been on before. So, oh, maybe there is, maybe. So I'll just explain a little bit more about this volume profile. This represents activity, in other words, orders placed, buys and sells placed during yesterday's trading session. And where my cursor is now, that red line, that is the price at which, and if I can just move that out of the way, I can see that price in question was 1927.72. That is the price at which the most trades were placed in the entire day. And because that is the highest level of activity, what it means is that there's a lot of money being invested at that price, and it means that people who invest in money will defend that price. And so if price comes back to it, there's a good chance that price will reject from it, because if this is buyers, if these are sellers investing money in there, they won't want price to go above that, so the price will reject. We don't know at this point what those orders were. We simply know that is the total activity, and then these are other slightly less important, but still quite important. Right, okay, so let's have a look at today's price. Where are we? we are, I had this marked up before for an area of consolidation. Can you see, there's, if I sort of put my cursor on that green candle there, up to that level there, and down to, well, we'll go to the extreme, that level there, there's an area of consolidation going on there. I was watching Anastasia on Monday, and something that she pointed out has slightly blurred my view of that at the minute. But what I'm going to do is, you've seen me in the past put on a parallel channel, where if you go to the second icon down, hover on the arrow, and then down to parallel channel. I'm going to try and put this parallel channel where I think it ought to be, and where are we? We're on the 15 minute. I'll go to the 30-minute chart and see if I can find it slightly easier. So, second, trendline tools, parallel channel, and just try and define this area of consolidation. I'm going to, for now, I'm just going to take to the top of that green wick there. And if I take it across and try and keep it horizontal, and then drag it down to the bottom of that same candle. Okay, that'll do for starters. It's just, again, it's just visually focusing my attention on an area of consolidation. Now, I've quite deliberately ignored these wicks above, because Anastasia the other day was talking about, well, I mean, we've already, both Paul and I and all the other live traders talk about price going on a stop hunt. So this could represent a stop hunt. This could represent money being taken by taking people's stop losses out. So there's money sitting up above that area of consolidation, and there's money sitting below that area of consolidation. And what may well have been happening here, if I've got it in the right place, is that price has gone up to take out stop losses, and gone up to take out stop losses, and gone down to take out stop losses. This depends how accurately I've got it placed, but let's leave it where it is for the time being. And we'll see that one thing that Anastasia talked about was price moving away from their consolidation. And she reckons, and I'm still back testing this, I noticed Paul posted something yesterday that he'd seen this actually working on one of the Forex pairs. And what Anastasia was saying was that price will leave that area, go far away, and then if it returns, it'll return to 50% of this, well, in my case, a parallel channel. Now, this dashed line here, if you look at the settings I've got on, you see, if I uncheck the middle line, that middle line disappears. But if I put the middle line back on again, that middle line is actually at 50%. So Paul was using a GAN box yesterday, but I tried to use a GAN box, and yes, you can actually place the 50% in there, but the advantage of using a parallel channel is you can also set an alarm, set an alert to let you know when price is exiting that channel. So that's why I've chosen to use a parallel channel, and our price has clearly moved out. What I'll do is I'll put this alert on. You can set it to be alerted when price exits the channel. I do it once per bar. and create, and you'll see in a second, you'll see that there's the alarm icon. Now, one thing I've noticed about this alert is it works in both directions, even if you set it for one direction. So it won't, no, sorry, that's, I'm using the wrong phrase there. It will tell me when price comes back into the channel, as well as when price leaves the channels for some reason. So if we were analysing this trade now, I would be looking at a potential buying opportunity, because we're within the field of play and we're below the target. So first thing is, yes, we're in a potential buying opportunity. But then what I do before I get into any trade is I add a couple of additional confirmations. Now, maybe better going back to the 15-minute. Yeah, okay. So 15-minute chart, I put on the Ninja Matrix. I just check that my settings are correct. And if I'm on the 15-minute chart, I need to be on the 1 hour setting there. And what I can see is that we've got a Ninja Matrix up, which is confirming. It's the first confirmation I look for. Then I look for confirmation number 2, which is an indicator. So I turn on the indicator and I need to be on Heikin Ashi candles. And yes, you can see we had a Ninja up before the Ninja Matrix up. And we're also, the third confirmation I look for is for the 5 MA, which is the yellow line, 5 moving average is above the 13 moving average, and it's moving away. So that's my third confirmation. I'll remember to take off the Heikin Ashi candles. I was reminded yesterday, I keep forgetting to do that. So here we are, we're back on normal candles. And the only thing that would stop me getting into a trade right now is the fact that price is actually coming down. It's been up to that point and it's actually reversing now. If you look on the smaller time scale, you'll see that it's been up, it's coming back down. So there's a little bit of indecision, and look where we are in relation to the area of consolidation that I marked off before. We're just outside that area. So the question that goes through my mind is this another stop hunt? Are they taking price up there to take out stop losses? So we need to decide, is this price breaking out or is this price faking out? It's beginning to look like it might be a fake out. Let me see. Okay, so right. So let me just summarize that situation again. Just telling you what goes on in my head. I've put the Ninja Matrix on, and it's telling me we should be looking for buys. There's a Ninja Matrix up. I put the Ninjacator on, and I put Heikin Ashi candles on, and I've got a Ninja up at that same point, or just before that. No, sorry, there we are. So we've got a Ninja up, a Ninja Matrix up, and then the third confirmation I look for is the 5 MA to be above the 13 MA, and for the gap between to be widening. So all of that is telling me, yes, there's a potential buy, but when I take the Heikin Ashi candles off, I get a slight question mark because we're actually price is reversing. Any questions on anything that I've done so far? No questions. I must have explained it really clear.
Oh, good. Good.
Right. Okay. So, as I say, I'm trying to explain what goes on in my mind when I look at these charts, and what my thoughts right now are: stay out, because price is going in the wrong direction, and this could well be a fake out rather than a breakout. So you might think, well, we're going to miss out on some pips because from where price is now to the red line is 32, and all the time we're sitting here, it could well reduce, but that doesn't change my point of view. My point of view is that price is certainly hesitating now. It's not going in the right direction. So whilst we're waiting for that situation to develop, I'm going to look at some potential targets other than the point of control. So when I look at the chart, I think, right, so when price decides that it's going to move in one direction or another, what are the potential targets? So my first target in this case will be to the point of control. And I would take one trade to that point of control, and I will get out of the trade at that point, even if price was heading in the, even if price was looking like it was going to go through that point of control and upwards. The reason I would get out at that point is, as well as being a target, this is also a potential reversal zone for the reason I explained earlier. If this point of control is created by largely sellers, they'll defend that line. They will not want price to go above that, and therefore price may well bounce off. Price may well reject, and I would, as I say, get out of a trade at that point, and I would reassess. I would sit back and wait and watch and see what happens in this area, and I would wait until price actually went above that red line before I would consider getting into another trade, potentially going up to the black line. But I'm just going to point out some other potential targets. And I'm getting these first targets are from yesterday's volume profile. So as I pointed out earlier, if you look at in this area here, there's another, I'll see if I can make that slightly clearer by moving the indicator. Yeah, okay. So there's another area there where there was a lot of activity, a lot of price activity. And I would suggest that if price does break above that red line, it's going to struggle to get past. Well, there are two there. There's one line there and one line there where there's sort of a peak of activity. So I'm going to suggest that price, having got through that red line, will go up to there and possibly struggle to get past it, and then up to that point and possibly struggle to get past it before it goes up to the value area high. So that's one set of thoughts. There's a possibility that price will go up to the value area high, but it may not go in an absolute straight line. It may stop off on the way. Now, just to look again at what's happening to price, it's actually moving now, and it's heading towards our point of control. There are a few pips left in that trade. You might get 10 pips out of that. It might be more like 8 pips, but it was worth waiting because that candle was a bit of an indecision candle. There's a long wick at the bottom, and there's also a wick at the top. So it would have been could have been costly if you got in and it decided to go back the other way. But we'll watch it. There are plenty of other opportunities. Had I not been doing this live session, I might well have got in at the start of that candle, but hey ho. Right. Let's think about alternatives. Let's think about what might happen if price hits that red line and is rejected and it starts to come back down again. Where's it going to go? So think the same thought process. There's a big area here of price activity, and price may well come back down to that area and take its time getting through. By the way, just to explain what I'm thinking here, what you'll find is that, and this is a better example, where price volume has been high at that point, and it moves upwards to that point. Here's an area of decreased activity. And what tends to happen is that when price moves from that red line up to that position, it moves fairly rapidly because there's been less trades have been placed in that area. So when it moves, it'll move fairly rapidly up there. And similarly here, this will be a fairly rapid movement, then it'll slow down, then there'll be another rapid movement, and it will slow down, and then there'll be rapid movement downwards. I mean, and if you don't need to take my word for it, just watch what happens over the day and see where it hesitates. It'll hesitate at the peak of activity, and it'll get a move on where there's been less activity. So if prices to come down, these are areas to watch, and there's a potential reversal zone where the black line is. We also need to think about the bigger picture. So if price goes through that red line and then goes back up to the value area high, what's going to happen then? We've got to take a decision. Do we think it's then going to reverse and come back to a point of control, which is one possibility, or is it going to go back on its upward movement, in which case we've got another potential target up there? That is an outstanding point of control, which we looked at earlier, going back to the 14th of March. Now it's sitting there literally waiting to be taken out. It will be taken out at some point. The only problem is we don't know when. I can absolutely guarantee it will go up to that point at some point, up to that price at some point. But I can't guarantee it's going to be today. And if we look at what went on earlier, we should find that there was an outstanding point of control further down. Yes, there is one there. So that one was the one we just looked at, going back to the 14th of March, and there's one below, which is going back to the 24th of February, sitting there waiting to be taken out. So we've got many potential targets. Reset the chart, put it back on 15 minutes. And yes, we're heading slowly, but we are heading towards that point of control. Just to sort of right, so look at this. I'm looking back at yesterday's activity, and my eye is going back to the day before. So this was Monday's volume profile. And what that's telling me is that this blue line here would have been our target for yesterday. Had we sort of drawn a red line on there, you would see that price actually hung around that point, the previous day's point of control for a while, and then it took a massive drop down well away from it and never returned. It never went back to the point of control. So it hit it a couple of times in the early hours, but after what, 8 in the morning, it went down and it went into consolidation and it went down again. And it went away from our point of control. That happens. But if you backtest this theory, you'll find that it quite often returns to the point of control. If it does this kind of thing and moves away from it, we have further strategies that we can use to decide where price might go other than back to the red line. I'll talk about those in a second. I'm just interested to see what happens when this price actually hits the red line. Any questions on that whilst I'm just sitting and watching? Perhaps I forgot to look at the news for this morning, but I can tell you that there is these symbols here indicate the US dollar news, and if we go to the Forex markets, can you see my Forex factory screen?
Yeah.
Yeah.
Okay.
Yeah.
So what we've got today is some red flag news at 12 lunchtime UK, but that's the Fed Chair Powell speaking, and then we've got some lesser news at 2:30, and then on to 7 o'clock. So the biggest news event is that one, the US dollar, but that's a speech by the Fed chair. So although I didn't look at it on where are we? Didn't show you that I was looking at. I had actually looked at the news early this morning and realised that sort of 11 o'clock, 12 o'clock is the major news at the minute. So where we're going, we look as if we're heading towards the red line, don't we? And so we had a Ninjacator up at that point when we were on Heikin Ashi candles. We've got a Ninja Matrix up. If we put the Ninjacator on, yeah, we've got a very strong 5 MA is above the 13 MA, and the 13 and the 5 are both pointing upwards, and the gap is getting wider. So that's a really good sign that price is going to increase. Okay, so that's not going to move very quickly. What I can do is talk to you about the circumstances in which I would take trades away from the point of control. I say today we're in a position where price is in the field of play, so that is our first target. We're looking at field of play, we're looking at a target, and whilst it's in the field of play, our first trades will be back towards a target. But what happens if price moves away from the target? What happens if gets to this point, gets above the red line and starts and continues to increase. What happens if price gets up here and continues to increase? So I'll just go through my thoughts on taking trades away from, and these thoughts are based on Anastasia's teachings. Let's see if we can do this. I'm looking for a pathway. Okay, so let's say the price from where it is now goes up to the red line, and well, the first option is it'll bounce off and reject. Stay there. Right. Okay. So the first option is that price is going to hit the red line and reject from the red line, and start making its way back, possibly all the way down to there. That's option one. Let's think about option two. Option two is that price will go up and continue on its journey upwards there. It could well come back and retest, and then head upwards. Now, tell you how I approach this. As I said earlier, if I got into this for a buy at some point round about here, I would set my take profit at the red line, and I would get out of the trade at the red line. Whatever happened, I would get out at that red line, and I would reassess. I would watch and see what price did. Because, as I say, it is a strong possibility that price will reject and come back. It might reject and then go back and retest the line and through, but we don't know that. I would wait until price, and how can I show this? I would wait until a candle had closed above that red line. Well, better change that color. Let's say blue. I would wait until a candle had closed away from that red line. So if we're on a 15-minute chart, I would wait for a 15-minute candle to have closed above that line before I'll get into a further buy. And it's in terms of priorities, this is my first priority, to hit the red line. Second priority is a further buy up to value area high. And if price rejects off it, then my second or third priority might be to take a sell back down to that line there. But in both of those cases, I'll be looking for price to have moved away from the red line and a candle closed either well above it or well below it. And if you watch Anastasia, she would say she needs to see air between the point of control and the candle close in either direction. What she means by need to see air, she means she needs to see a gap. So that's what I've been doing. I've been waiting for a gap to appear between price and the point of control. And once the candle is closed, either below or above, then I consider getting into a trade. And my target might be up to the value area high, or if it reversed, it would be down to the value area low. And that's been quite successful. And it's equally successful if price gets outside the field of play. You just need to decide when you're going to get in, because price can do what it's doing now, which is reversing. So I'll get rid of that. Are there any questions on that? I'm not sure I explained it particularly well. And so I'll just to continue with this line of thought. If price, if a candle is closed with a gap between the red line and my candle, I would still want my 3 confirmations. So I would still want to see the Ninja matrix was in my favor. I would still want to see that there was Heikin Ashi, on Heikin Ashi's, that there was a Ninja Cater in my favor, and I would want to see that the 5 was above the 13 if I was going for a buy, and I would want to see that the 5 was below the 13 if I was going for a sell. So I would still look for my 3 confirmations, but the one I'd be looking for first would be for candle to have closed, leaving a gap between the point of control and where the candle closed. Right. Anybody got any questions at all? Because I can't possibly have explained that perfectly. Absolute silence.
Yeah, that's okay. Yeah, Richard.
You got that? Okay.
Yeah, well, okay. Yeah. Right. You've actually explained it before, so.
Yeah. Okay. So I've remembered to go back to normal candles, and we're still looking like it's going to make its way to the point of control. And then, of course, we need to make a decision. Once it hits the point of control, we need to make a decision. Is it going to continue upwards, or is it going to reject from that price there? Okay, so if there are no further questions, I'm going to call it a day. What I will do, if anything changes, I'll post my revised chart and possibly with my thoughts in the group. But otherwise, we just need to sit and wait. It's possibly a little bit late to get into that trade, but that's not a problem because there are plenty more trades throughout the day. So thanks for popping on. Oh, I need to mention next week there's a possibility that there might be a slight change next week. We may get James Leone next Wednesday morning at 8:30. I'm not sure if it's been confirmed. Is Damo still on?
Yes, mate, I'm going to confirm with him. I'm just going to give him a message this morning, mate, and confirm with him this morning.
Okay.
Thanks, David.
So that's a possibility that next Wednesday morning it won't be me, it'll be James Leone, and obviously that'll be confirmed.
I'll let Paul know this afternoon, but yeah, it should be fine. I'll give him a ring today. I'll give James a ring today.
Okay, thanks very much. And what that means is Paul's asked me if I'll move my 8:30 session to Tuesday. So I'll be doing an 8:30 session next Tuesday and also a 1 p.m. session. And what I'm going to try and do is a sort of before and after. And if price behaves itself as we want it to, it'll be a good before and after session of what this is what I think is going to happen, and this is what actually happened. And we'll combine the 2 sessions into a video and put that in the guides. Okay, well, thanks very much. I'm going to call it a day, and I'll see you. Well, next time I'll be on live will be next Tuesday morning, assuming that James does the Wednesday morning, but we'll let you know. Thanks very much,
Richard. Much appreciated.
Thank you, Richard.
Cheers.